Aloha. Aloha, everyone. This is me at BigWaveTrading.com and BigWaveTrading.net. Me is Joshua Hayes. First off, let's start off with the New York Stock Exchange. Now, the New York Stock Exchange and the market was appearing to be basing. Everything looked to be going good. The 50-day moving average is about to test the 200-day moving average, cross and kiss. But like I told you, with the 200-day moving average in a downtrend, you're going to need a test of prices to those lines, and then it needs to go back higher and hit new highs before you can get real bullish. I am still not fully invested. However, recently I've gotten a lot more invested, and that allowed me to get up to a 20% gain. Remember, I'm not a day trader, and I am not a long-term holder, and I also do not just be like, oh, I got it right, I'm up 200% this month, this, that. That's not my style. However, I want to remind you, the mutual funds that are up 50, 40, 30% from March to June, you guys need to look a little bit more long-term than 3 months. If you look at 6 and 12 months returns on these funds, you'll see they're doing horrible. Not 6 months, but let's do 12 and 24, 32 months. You start looking at that and you start seeing some very pathetic returns. And don't forget, the funds that are up 40 and 50% this year are the funds that were down 35, 40, 45, and 50% last year. So they had 100,000, dwindled it down to 60,000, and now they got a 50,000 gain, so now it's back up to 90,000. Well, guess what? You're still in the hole. So you guys got to keep all that in mind. Also, day traders that have just popped up out of nowhere because a market rally in March made them believing that the bottom was in, have been getting very lucky. However, I've been monitoring things closely, and I can see that now they're losing money the past 2 weeks, which shows that they're extended. However, I'm losing money too. I've gone from being up 20%, now I'm up less than 10%. However, I'm finding that my biggest holdings now aren't doing that bad at all. Now I seem to be getting hit with my lower stocks, just like how my little smallest stocks were making me the most money early on. Now they're doing like the most damage. But it's okay. I love my stocks and the way they work, so I want to let you know. Even with today's break of this consolidation area, I'm only bearish on the very short term. So short term, I'm bearish on the New York Stock Exchange. It was heavier volume than the day before. It's clear distribution day. However, look at how much below average volume this is. So I expect or would hope that the 50 is going to get above the 200-day moving average. Prices will test this average area, support, then rally higher. And if you hit new highs on higher volume, we're going to start having my perfect charts start to set up. Because I've already got a few perfect charts, but they're in stocks that are either way too thin or too cheap to even want to load up on. So I don't even want to. Oh wait, you know what? This video is going to go out later on, so I can't say it because right now my technician's in Las Vegas, but later on I'll go out. So anyway, New York Stock Exchange crashed on lower volume. I'm bearish on the short term. Intermediate term though, I'm still overall bullish. Right here, it has broken down the sub-intermediate term. I'm sorry, everybody. It has broken below this line. However, I'm looking more at this overall support area right here because it's also right at where the averages are. So anything above the averages is good, and in the sub-intermediate trend, I'm going to call it up. Intermediate term trend, if I'm using the November or January as a start, it's up at least, or mixed, or sideways, lateral. You can call it lateral or up, depending on where you start. If I start here at the November lows, it's up. Also, long term, still in a downtrend. You can either use the June area, or you can go all the way back to 2007's top in October. Either way, the long-term trend is still down. The short-term trend's down. The middle trends, to me, are up sideways on the New York Stock Exchange, which also its brother S&P 500 is the exact same one, so there's not going to be much difference in there. The 50 days also near the 200. You can see prices there. The lower volume still indicates that hopefully we're pulling back and consolidating in lower volume, and as you can see from March till where the uptrend stopped, a lot of big, tall green bars. And even the red bars that you see here, you get some tails. And also, look at all the tails on the down days. There are a couple nasty sessions, but that always happens. But a lot more open body bars and good tails. Now, most importantly, though, the NASDAQ. That's the one I'm really, that I watch. This is my index that I always keep track of.
it already had its golden cross, but it's not a bullish golden cross. It's just a golden cross. A bullish golden cross would happen with the 200-day moving average in an uptrend. So the 200-day moving average you see is still ticking lower. Went lower on Friday and is even lower. That's how you see these baby stair-step areas. Until this turns around and goes up, it's not going to be time to load the boat long. If prices come down, test the 50-day moving average, starts to rally, then both lines will start to be turning up, and that'll be the bullish signal. Or if prices would happen to go lower, base around a bit more, and then break out above the 5200-day moving average, but the 50-day was below the 200-day moving average, they should be both trending up by then, and by then, when the 50 crosses the 200-day moving average, they would both be in an uptrend. Prices would be above it. Very bullish to go long. Overall, though, look at the volume. Lower than the 50-day volume average, higher than the day before. So it's a technical distribution day, but overall, it's not that bad. Plus, look at the NASDAQ, well off the lows. Look at the New York Stock Exchange, not well off the lows, but off the lows. And besides the NASDAQ being up off the lows, I don't have my IBD indexes up, so I can't show you. But here's S&P 600, bouncing off the 200-day moving average intraday. Now, if it bases around the 50 and 200-day, it'll start dancing around. And even if the 50 is below the 200, let's say a month from now, if it starts to move higher, the 250 should be trending up by then. Hopefully. I think it's going to take a month to get that 200-day to start going up, to be honest with you. So it's not going to be super, super bullish for a while. S&P 600, you can see a tail again on the short term. Trend is down. It was lateral as we were building a base here, but it has broken down now. So it is in a downtrend. If you want to use this line as a sub-intermediate term line, as you can see, the 400 is holding on to it. Let's look and see the S&P 600 is. Yes, it sure is. Using this line right here, you can see the S&P 600 is holding on to it. And looking at the NASDAQ, you can see that the NASDAQ is holding on to it. So that's very bullish. And actually, with the New York Stock Exchange actually showing some negative divergence, I'm actually kind of bullish on that because the better of the two markets is the 600 and NASDAQ. So that's great to see it moving up. So overall, short term, sub-intermediate term, you can be a little bearish if you're on the New York Stock Exchange. Short term, you can be bearish. Short term on the NASDAQ, you can be bearish. However, sub-intermediate term, this is bullish either here, here, or even here. Intermediate term is actually back to there. So this is bullish, sub-intermediate term. Short term bad, sub-intermediate term good. Intermediate term good. Long intermediate term mix sideways, not bad. Long term down. So that's how I'm looking at all that for the NASDAQ. And I want to show you the IBD indexes, but I'm going to have to come back and show it to you later because we're not going to have time for me to open up the charts and everything. But I do have time. I am under 8 minutes to show you the commodities. Platinum. Look at the breakdown today. Now, either this is a deflation play again, or the stock market is having assets move into it because the economy is getting better. So either way, to me, it's okay, good, because to be honest with you, I would love to buy gold at lower prices. Bullion, I'm talking about, in coins, not GLD or IAG or anything like that, not the stock or not the ETF. So silver, holding on to its uptrend, I'm okay. Short term, though, it's clear that it's a downturn trend now. You can see that line there, and you can see how it broke down below this flag pattern that it was forming. It's forming a flag pattern, broke down below it. So it's bearish on platinum. Bearish on platinum. Now let's go throw up silver. Silver bearish. You can see it broke out of this very nice cut pattern, but then a very bearish thing happened after the breakout. It started a downtrend, and now it's breaking down below this flag pattern. That is also bearish on silver. And with the market moving down, that's not good. However, the stock market got support late in the day, so it might turn around and go higher. If gold and silver and platinum continues to go down, that means that the United States economy is strong. If gold and silver start to go up again and the market starts to go up again, it does mean that it's just an inflation bull market right now. And it don't matter. As long as the hot charts are there, good. I'm good. Gold, as you can see, down again, right at its 50-day moving average. This will be the telltale sign. Gold already was in a downtrend earlier on than the other metals. Oh, see, it's hard to draw whenever I'm that tight. So as you can see right now, it's in a downtrend channel. Hasn't really broken down out of this flag pattern or whatever you want to call it, a handle. It could be a handle. This could be a cut base. This could be a handle, except for if I look at volume, I'm going to see that it's not a handle because look at platinum breaking down into the base, silver really breaking down into the base. So silver is very, very obvious. So gold's the last bastion of hope. Okay, I'm going to go and wrap it up there. Actually, you know what? Let me go and show you the dollar. Just a little bit more time. United States dollar. Look at that. Remember, it broke down the neckline, and I told you if it was this is going to be very bad if it continued to fall down. Head and shoulders top clearly. Shoulder October to December. March is the head, and then this side's the shoulder. Well, after the breakdown, it has now rallied straight from there, 3, 4, 5, and you can see that since that low, since that bad move down, it is up 3.56% in 1, 2, 3, 4, 5, 6, 7, 8, 9 days. That's very, very bullish. All right, I'm going to go and wrap it up there. Aloha.